We have a breaking news coming in, viewers. Definitely looking into that. Bharti Enterprises and Warburg Pincus have announced the investment. Bharti and Warburg now to own 49% stake in Higher India. This is a strategic investment that is aimed to boost Higher India's growth. Also, the deal will strengthen Higher India's position in the market. And for more on this, we are also now joined by Aishwarya Patil on the story. Aishwarya, if you hear me, give us an understanding of what this deal is aimed at doing. Of course, we are also looking at Hire's, India growth story, getting a booster shot with this deal now.
Well, Warburg Pincus, which is a big private equity firm, and of course Bharti Enterprises, these two put together will now hold about 49% in Higher India. This is a strategic investment, like you rightly mentioned. The rest of the 49% will be owned by the Higher Group, the parent company, and the rest 2% or so will be owned by the Higher India management. That's the stakeholders share there. But what do they plan to do with this collaboration that is being strategically made? Of course, entering India's large consumer market, that's of course the end goal. They plan to accelerate through this collaboration and the strategic investment, accelerate their growth and expansion in India and kind of expand and also diversify their services as far as the white goods market is concerned, more products. That's what the company is targeting. Remember, earlier the company had said that they will be targeting a 14,500 crore, that kind of revenue that they are looking to clock in FY26. That's been the claim. The company has also said that they've achieved a CAGR, or compounded annual growth rate, of about 25% in the last 7 years. Local sourcing, make in India for India is one of the goals that they're also targeting. So strategic investment done by Bharti Enterprises.
Aishwarya, what about the deal value or the valuation there? What are we looking at of this 49%?
Right. That's something we're still yet to see, because the press note so far only mentions what they plan to do with this strategic investment, but we'll follow up on that and get you those numbers. So far, that's been the case. We'll keep you posted on what the deal value is really.
Absolutely. A big deal announcement coming in. Thanks a lot, Aishwarya, for getting us all of that. Bharti Enterprises and Warburg Pincus, viewers, have announced an investment into Higher India to collectively now own 49% stake. Of course, we are still awaiting to see, the companies are yet to disclose the deal value or the valuation at which. However, some of the estimates that were already going around, because this buzz was already there before the announcement has come in, was being seen, news reports indicating that somewhere around 15,000 odd crore rupees of a valuation is what this 49% could have got hired there as well. So we'll of course wait for the final figures as the announcement would definitely come in. Remember, Higher India manufactures ACs, air conditioners, refrigerators, televisions, washing machines, kitchen appliances. They have their 2 facilities in Pune and Greater Noida, and we'll have to see how this really augurs well for the Bharti Enterprises group, as well as how does it change the dynamics as far as the Indian consumer growth picture is concerned. Let me go across to Shaina once again to try and understand, how would she read this news at this point in time. Shaina, big deal coming in. Bharti Enterprises, Warburg now announcing this big investment of 49% in Higher. And Higher has had a strong historical past and globally as well. And locally also, a lot of products are already available. How are you looking at this investment? And what would you see as an opportunity there?
Yeah, so I also have heard a figure of about 15,000 crores is the valuation that they have put it at. And I would say it is positive because, they have got their products are already available, as you mentioned, and a good rated products. So I would see that as bigger competition to the existing players. And, especially if you look at one of the recent listings, LG, there I think where the valuations are expensive, it is bad news for them. And at least stockholders, like if you're invested in LG, it's negative because you are going to have a big new competitor that's come in, and this is a subsidiary of China, the Higher China. So I think the products will be good and very competitively priced. So I would say the other stocks need to watch out.